Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, May 19th, 2009. Well, we're seeing somewhat of a muted day on Wall Street today. Very, very light volume again like yesterday. Yesterday was one of the most crazy days for the fact that you had literally no volume in this market. It was probably one of the lightest days, if not the lightest day of the year, even going back to January 2nd after New Year's in this market. No volume whatsoever, and the market's just ripped higher. So what that's telling you is that you have to be very, very cautious about any move up on no volume. And again, we are a little suspect of the move up that we had yesterday, and we'll have to see how it plays out today, what type of activity we get. Now, the interesting thing about today is we all are seeing very, very light volume. Again, it's slightly heavier than yesterday, but not by much, and ultimately the markets are just standing on the flat line. You have oil up about 50 cents for the day, the transport's up about 11 points, the utilities up about 5.5, so you have a little bit of a positive tinge to this market. The Dow is up about 6 points, S&P 500 up 1.5 points, and the NASDAQ up about 3. So you do see a slight bit of positive out there, but we have come off the highs of the day, as you can see on the charts. Now, I have all the key levels on this chart laid out for you in key different colored trend lines. Now, why we do this is because these levels are key, and they go back days and days, and that's why we use them. Look at how accurate they are today. Literally, look at this. The market today, at the highs right here, right into this green trend line before it pulled back. Where did it go? To the red trend line. Notice how the red trend line, very easily seen, is the pivot point right up here before the pullback and then the breakup. You have to know how to use these. Also, notice how the pullback took us right above the 20 moving average. This pullback here took us right to the yellow line, right above the 20 moving average as well. And then ultimately, you had a high right up here into resistance at around 91.90. That was a good resistance level on this market, on the spiders, the SPY. And we're looking at the 10-minute intraday chart right now. Now, what's interesting about this chart is that we've actually had a little bit of a minor mini breakdown here in the afternoon session. We have not confirmed it yet, but you have a little bit of a breakdown starting. Now, the one thing I have to be cautious with when we're talking about breakdowns is that any breakdown that happens in this type of volume environment has to be taken with a grain of salt, and it's not necessarily a good one. And what I mean by that is yesterday, the same thing happened. You know, there were multiple times where the market tried to break down, it formed a bearish pattern, but with Goldman Sachs up yesterday, Exxon up, oil up, the dollar weaker, and the dollar, by the way, is the driving force behind this market now, no doubt about it. You're seeing the markets gallop higher, yesterday being the key example. Now, I could show you the UUP chart today. That's the dollar index. Every move in the UUP, up or down, has an opposite corresponding move in the markets. It's that simple, folks. Again, you can follow the dollar chart and really dictate every move in this market, and you don't even need to see what the market's doing. If you have that dollar chart, you will know what the market is doing. That's how key it is. It's really been that way since the beginning of the year, with slight variances. Every once in a while, you have a major news break, the government obviously pushing the markets up, and so forth. And what you're seeing here is exactly what we were talking about, is the reversal in the markets due up here. Now, it doesn't necessarily mean it's going to last, but right now, no volume in the market. All it takes is one buyer to come in and push the market up in a very small way, and all of a sudden you have a reversal like that, and the markets shoot right back towards the highs. So again, a good example of exactly what we're talking about. Now, whether this is manipulative or not, that's up in the air. You know, we don't necessarily care about that. We're just here to trade it. As long as it's tradable, we'll trade it. We'll isolate it due to our technicals and be able to isolate everything. All our rules will apply, and we'll be able to stay out of plays that we shouldn't be in and be in plays we should be in to profit. Okay? Now, again, a couple things, guys. Just note the volume here. Dead volume today. Dead volume yesterday, except that final candle on the SPY chart. By the way, the volume was by 30 million the latest day yesterday of any day this year in 2009 until that last candle. That last candle had a lot of volume in it, most likely shorts covering as well as some institutions unloading stock. Now, again, what you can see here is the market initially broke higher, then pulled back, but then raced higher as volume started to get lighter and lighter, and so far it's been holding up in that upper range. Now, I talked about a mini little breakdown, and again, we'll have to follow it, but if you take the high down here, see the high from 2 days ago before this gap, and just take that right now, connect it right through the low pivot point from yesterday, you can see this point, there is technically a breakdown here of this level. You had stayed above this trend line all day today, and then you had a little bit of a pseudo head and shoulder pattern, if you will, which you could actually look at. It's a very steep one right here. Not a great one, but you can see a little bit of that pattern. Here's your head, here's your shoulder, here's your break. Now, again, could you go up and retest this blue line right here? Absolutely. That would almost take us to the highs of the day, but at the same time, you want to see, can we break low or below this? Right now, you're hovering on the 20. You just closed. Good reversal candle here. The real crux of the situation will be whether or not we continue up. If you continue up, it's going to negate it, and I'd be very cautious in this light volume environment. If you can come down and break this yellow line right here at around 91.25, you could actually have a decent little bit of a sell-off in the afternoon session today. Now, again, the one worry is the volume. Guys, I'm telling you right now, there have been some interesting situations here. We've seen buy programs in the last minute or two of the day over the last 2 months that have been literally $20 billion of buying in the futures. It's been a very, very suspicious activity that's been going on, and again, you just don't know who's necessarily doing it. Goldman, the Treasury, you never know. But the idea being is you just have to be aware of what's going on out there, and you don't necessarily want to step up in front of certain things at certain time frames. You have to know your time frames. 10-10-30 key reversal time frame. 3-3-30 key time reversal time frame as well. In addition, you also have that last few minutes of the day you have to be very, very cautious on. Continue to watch what's developing here, guys. This could be very, very interesting. You do also have another trend line. If you take the low here and just drag it up, look at what you get. All right, you get a connection from here to the low right here. It also coincides to this coming down as well. This will be a lot of support, this yellow trend line, if we sell off and come back into it. So please be aware of that there's a lot of support right in this area. If this breaks, then the 50 moving average right here should be a pretty easy target to hit wherever that is at that point in time. Then the red trend line at around $90.75, and then down to around $90.20 on the spiders. You could have a decent fall. There will be a little pivot low support right in here as well. We should talk about as well. Just put that in at $90.50. $90.50 should be a little bit of a pivot minor support line right there in the charts after the break of this red line down to here. Then ultimately down to around $90.25. Then the 200 moving average, obviously, down here afterwards. Now, just to continue on what we're talking about here, I want to go to the 60-minute chart and show you something. Now, why did we halt at the highs? Where was this high trend line coming from that we had on our charts? Well, simply put, it was a main level hit today in the morning session on the 60-minute chart, and I can easily show it to you right here. See this line stretching across. How do we get that? Well, just look right here. See, remember the gap? This was 2 weeks ago from Friday, I believe. Actually, a week ago from Friday. And you can see this was the high in the markets. You came up, beautiful double top right from this point right up here. All right? See that double top up here? From basically 5.7 to 5.8 double top. Then Monday we gapped lower. Notice the gap window. The tail's right there. You take the high tail area, just stretch it right across. That's exactly where this market came into resistance. So ultimately that is a shorting opportunity. You have to understand that if you're a swing trader, that would be the spot to take a short position, obviously, as a swing trader if you're looking to hold. Otherwise, you're obviously thinking it's going to fill the gap and maybe retest the highs, which is fine too. It may do that. You just got to follow the technicals and understand when you're taking a position in anything, why are you doing it? And that's the bottom line. You have to understand why. There has to be a reason behind every trade anyone ever does. If you don't have one, chances are it will be a losing trade. You just can't guess. There are specific levels. So gap fill would be right up here on the 60-minute chart, right in the 92.75 level. And if you ultimately go to the highs, then you're at 93.25 about, give or take. But nonetheless, you are seeing a little bit of a resistance area right here. The market's trying to come in a little. Again, the light volume definitely bothers me. Look at this today, right here. Look at that volume just dry up on the 60-minute chart. All right. Again, we'll have to see where this comes into the end of the day. Is it the lightest day of the year again? Do we have another light day today? It's a little heavier so far than yesterday, but it could lighten up depending on if we get that surge late in the day like yesterday. The last candle yesterday was the most suspicious candle I've seen, but a lot of short covering that happened yesterday. People have been shorting the market all day long, and you just never got a pullback yesterday on light volume. So ultimately, they had to cover right at the end, and that's why you got a good surge right back up there. But in any case, keep a close eye on this market, folks. It's going to be an interesting afternoon session. Volume very, very light. Watch the dollar. Can't stress that enough. This dollar is exactly why the markets are doing what they're doing. Notice initially you gapped lower on the markets and then had a little bit of a rally. What did we talk about the spiders doing? Initially, the markets gapped up a little bit here and then sold. All right, see that? So reverse. It's the exact reverse. Then all of a sudden the market starts to rally. Why is it rallying? Because if we go to the UUP chart, the dollar's tanking. It's as simple as that, folks. You're just talking about the dollar. Now you've all of a sudden gotten into a sideways action here on the markets. What have the spiders really been doing here? Look at this. Ever since you went up to this high, you've been sideways action in the markets. Same thing. Markets are telling us everything we need to know just by looking at the dollar. I mean, you look at the dollar, you'll know exactly where the markets are going to trend. If the dollar starts to increase in value, you're going to get a pullback in the markets. Could be pretty sharp. You can go to the daily charts and analyze it there. It works perfectly. All right, folks, enough for today. Hope you come and join our research center. Really has the essence of being a pro trader in there, and you'll be able to learn how to do it perfectly. Also, the chat room is always fun. Come join us. We hope to have you soon. Take care.